Howdy there, folks, and welcome into today's video. So today I have some bad news to share with you guys in regards to stocks, in regards to the stock market. We're going to go through some of this that I think needs to be said, okay? Now, first off, all right, we're going to get into some bad stuff here, but I think the most important thing whenever you pay attention to bad news and you look at some of this stuff is to not necessarily trade off of that information, especially if you're a long-term investor. What happens is a lot of times in the stock market, people start to make decisions, investment decisions, based upon something that could be going wrong in the stock market in the short term. And so I'm going to share a bunch of stuff with you, and I think these things are good to look at, good to pay attention to, but in terms of trying to make short-term decisions out of long-term investments, that's usually always a bad thing. That's going to get you into some trouble. And also, do keep this in mind. Not a lot of people will say this, but this is how it is, okay? The stock market is a place that sometimes can get bad news and go up, and can get good news and go down. And the reason being is the stock market is driven a lot of times by sentiment on what's going to transpire over the next 3 to 6 months, okay? Between the algorithms and a lot of Wall Street traders are always trading in and out of stocks, they're really focused on the next 3 to 6 months. So you could be getting bad news today, and the stock market could be going up because you're going to actually get good news likely 3 months, 6 months from now. That becomes a consensus belief. You could be getting great earnings at a given time period and actually see the stock market going down during a period where you get great earnings and great everything else in the stock market, because the sentiment is, well, it's great now, but in 3 to 6 months, it's going to get really bad, okay? So this is something very, very important to just share with you guys, and I got a bunch of stuff we're going to go through. Also, if you want to check out the official crypto partner of me, FTX US, check out the first link in the description down there. It allows you to buy crypto with no fixed fee. Enter HolySmokas as a referral code, and basically when you trade your first $10 worth of crypto, you get a free coin. So pretty darn cool. Also, check out my stock market investing mastery course. That is also linked in the description down there. That's 100% free. It's a great beginner course if you're in your first year or two of investing, okay? All right, guys, so let's jump into this. First thing I'm showing you here, essentially, this is out of somebody at Charles Schwab put this together, so thank you for them for putting this together. It shows S&P 500 stocks and how many of those companies beat EPS and beat revenue, all right, this past quarter. Now, this is the first troubling part, and then I think the second part's even more troubling, right? So essentially, 76% of companies beat EPS. Now, companies should usually beat their numbers, and the reason is usually companies go in with a little lowball figures to kind of give some wiggle room so they have, beats on the upside. So that's why you're going to see pretty consistently more than 50% of companies beat EPS. It'd be a disaster if it was ever a less number, right? So 76% of companies beat EPS, but here's a troubling trend with that. That's the worst we've had since Q1 of 2020, which was a disaster quarter because all of a sudden the worldwide economy was basically shut down almost overnight in the middle of that quarter, right? And so, that's definitely something to be concerned with, the fact that companies, and the reason being is everything just got so much more expensive. Transportation, fuel cost, everything, shipping, it doesn't matter. Everything, we know about inflation, and this is something that, because there's so much inflation, it's hurting companies' earnings, okay? And it's putting these companies in a position where they're just not beating the way they were. And the most worrisome trend, I guess you can say, is you look at Q1 2021, 87% of companies beat EPS, all right, in S&P. Then it jumps down to 86%, then 82%, now 76%. So we're clearly trending in the wrong direction when it comes to EPS beats. It's just getting worse and worse and worse. Less and less companies are beating their earnings per share, which once again are kind of set up for them to beat it. And so the fact that these companies are missing more and more often basically means that these companies just aren't able to be as profitable. And like I said, a lot of it's because they're having to raise price on products and services that could taper off a little bit of demand. A lot could be because obviously workers are commanding higher pay, higher salaries, those sorts of things. Marketing expenses have gone up for countless companies out there. And on top of that, there's just all the costs that go into making their products and services are obviously going up because of inflation. And this is just creating a situation where the companies aren't as profitable, okay? Also on the revenue side, about 69% of companies beat on revenue compared to 83% and 72% in the past. So revenue a little better, but a little better story. It's still not great, but it's a little better story. But it's really around companies' profitability that's being hit in a massive, massive way. All right, and so if you're thinking about, EPS trends and those sorts of things, that's definitely worrisome. And the worst part is, a lot of companies did not guide. They did not guide because they said it was such an uncertain time that they just can't guide. And so if a company can't guide them, more than likely means they're not feeling very confident at all about their earnings. The other worrisome thing we saw is as the earnings period went longer and longer, because some companies reported in about mid-February, some companies in late February, some companies in early March, and some companies at the end of March. It seemed like as earnings season transpired and went on, it seemed like companies were less and less confident as the quarter transpired. It seemed like the companies that reported earnings kind of in, let's call it the beginning to middle of February were kind of the most confident, and then things started to erode more and more as you went throughout February. And obviously a lot of that was the wall of worry stuff, inflation, gas prices going up, Russia, Ukraine, all these different factors started making companies a lot less confident and kind of not having as positive things to say. And so that's something to kind of keep in mind there, okay? Now, if we go ahead, I want to pull up some different sectors and talk about these and some potential pitfalls here in some of these, okay? So first thing I got pulled up here is housing stocks, right? Now, housing stock earnings, a lot of those companies will report at the end of April, beginning of May. Okay, this is when you'll see almost all these companies report will be kind of toward the end of April, beginning of May. So let's call it in about a month from now. And the worrisome thing when it comes to housing stocks is this is a sector that's already seen as being at their peak. Okay, this is why all these stocks are trading around their 52-week lows right now. All these stocks are trading around 52-week lows because people are looking at housing stocks and they say, I think we're around peak housing right now. And so if you're around peak housing right now, this is obviously horrible news for anything in relation to that. And RH said in February, their demand dropped by, if I recall, it was 10 to 12 points, 10 to 12 percentage points in February. That was definitely a worrisome thing. And RH was one of the last big companies to report their earnings in this earnings season, okay? And so that was kind of like a little wake-up call there. I was like, oh boy, okay, that's not good. And remember, RH, their target market is not the middle class. Their target market is at the lowest end, the upper middle class, but really the top 5% of income earners in the United States of America. That is RH's, that's who's buying RH furniture. And so if you're thinking about a company that even on the upper end is kind of got some worrisome things to say around demand, and then also they've been kind of getting killed with transportation costs as well. They were talking about container shipping costs, and I've heard that from the container shipping costs issue is massive. Like, I've heard it just from almost every company, from the Corsair Gamings to an RH. I've heard it from everybody. Container costs is ridiculous right now. If you're shipping products overseas, you are paying silly prices right now. And we don't know when that trend's going to reverse. It's going to reverse at some point, but it's not right now. It could be still a quarter away, 2 quarters away, 3 quarters away. So that hurts short-term profitability in a massive, massive way. But when it comes to these companies, here's the deal. If these companies have this upcoming earnings period, say, you know what, we're kind of seeing, the numbers just not coming in as far as demand for housing starts. Because keep in mind, a lot of these companies are still fulfilling houses, right? And we got a lot more to get into in this video, by the way. But a lot of these home companies that sell homes, keep in mind, it's usually a 6 to 18 month build process. So if, obviously a ton of people were still buying homes in early 2021, into mid 2021, even into the back half of 2021. So those orders are all getting filled right now, right? And as somebody that lives in a new community, I see it firsthand for myself. Like, a lot of these people ordered homes at the end of 2020, beginning of 2021. Those homes are finally starting to get to those folks now, all right? But what everybody looks at for housing is not what you're doing now in the homes you're fulfilling now. They're looking at orders coming in. What are your numbers going to look like in 6 months from now? What are your numbers going to look like in 12 months from now? That's what obviously investors care about, right? And traders as well. And I like to play these names for momentum. If all of a sudden you hear Toll Brothers say, demand's starting to slip. We're not quite selling the homes we once were. We're getting pushed back on pricing. We're not getting as many people coming through the model homes. And if you hear that from KB Homes and you hear that from Pulte and things like that, that's definitely would be a worrisome thing. Now, we might not get that yet, and that would be good news. The issue is, even if you don't get that, and even if, let's say in this earnings period, Toll Brothers, Pulte, KB, Lennar, all these guys in the housing sector all say, no, things still look great. We're still being able to raise price, things like that. Wall Street's just going to look at that and they're say, Yeah, that's fine. In 3 months from now, that's when it's going to start to hit. And so that's the problem with these housing stocks right now. They can't get out of their own way right now. And the reason being is even if they were to come out this quarter and say, you know what, things are still looking really, really strong, people are still going to say, yeah, well, just next quarter. Next quarter is when it's going to fall off. Yeah, this past quarter you might have been okay, but next quarter. And so they're kind of they're in a no-win situation. That's the best way I could describe it for the housing stocks. They're in a no-win situation. They say their numbers are good and they're going to continue to be good for the next quarter or two. Everybody's going to say it's great now, but it's about to get bad. So that's the problem. And that's why I can't pick up some of these companies. I love a Toll Brothers. I would love to own Toll Brothers, but I can't pick up that stock right now. And I just can't. I love RH, and it's a company I'm doing a lot of research in right now. I can't pick up that stock right now. Rocket has me very, very intrigued. I can't pick up that stock right now with mortgage rates just getting more and more expensive. I don't see that trend slowing anytime soon outside of a massive recession. But even in that scenario, almost everybody that wanted to refinance is already refinanced. And there are somebody that benefits in a massive, massive way. Then if you tack on the possibility of a slowing housing market in the back half of this year, which I think is very much a possibility, that's another thing that's not good for a rocket, okay? And so if I think about this is also another stock that I'm like, I can't touch it right now. Maybe when we kind of get into peak fear, maybe in the back half of the year when it comes to a lot of these housing stocks, maybe that's a whole different scenario and I can step in there. But right now it's a really, really tough pick, okay? And housing's a pretty big sector, and that's what a lot of people look at and they say, if these stocks are slipping more and more, then there's going to be an overall worry about at the end of the day, there's going to be an overall worry about the economy. Because if you talk about real estate prices starting to shrink, people's wealth starting to go down real estate-wise, that could obviously be something that people say, whoa, maybe I got to pull back. Chinese stocks got some good news recently. So China's opening up basically more and more audit firms to like U.S. ones to audit properly these companies. I think that's a step in the right direction, a massive, massive way for Chinese stocks. So I think Chinese stocks could get more intriguing. China needs to build back trust in a massive, massive way. And so if they're doing that, that's, in my opinion, that's huge. Now, big tech, let's be honest. What drives the stock market? Everybody answer it with me. Big tech. Thank you. Okay. This is what drives the entire stock market because these companies have huge weight on the S&P, on the NASDAQ 100. These sorts of companies are seen in front of your face. Now, last earnings season, a lot of these stocks, look at them, okay? Horrible. I need to add another stock on here. I know it's kind of a smaller big tech, but I still want to add it onto this particular list, and that is Shopify. Okay, Shopify needs to be added to this list, even though it's a smaller company. But I mean, if you look at these stocks, Netflix destroyed last earnings season. PayPal destroyed. Adobe destroyed. A lot of these companies just didn't have the numbers that Wall Street thought they had, right? Meta destroyed. I mean, it's just awful. AMD's been in a pretty big fall as well. I wouldn't call it destroyed, but dang, that's rough, okay? Apple's been holding strong. What if Apple doesn't have the best numbers this upcoming quarter, okay? If you're thinking about a risk to the market, Apple's been holding this whole show together. If it was finally to actually fall, that's definitely a risk, okay? Nvidia's has started to really slide. Mr. Softy's been holding up pretty strong, not quite as strong as Apple, but Mr. Softy's been holding up strong, probably continues to. Google, from what I heard, Google's search ad rates have gone insane. So that's good for them, but at the same time, the internet, like as many people using the internet, has gone down dramatically as the world's opened up more and more, which is not good for Google. So it's got Google's got one side good, one side not good. They kind of got a hedge business a little bit, so that's good. Intuit has come down massively. Tesla's been holding pretty strong. Amazon's been holding pretty decent, but the stock still hasn't gone anywhere since about June of 2020. Keep that in mind. And Shopify's obviously been a destroyed stock over this time. So when it comes to big tech in this upcoming earnings season, the way I kind of think about this is the good news, it's good and bad, okay? The bad news is I think Apple's a big risk. If they can keep putting up these stellar numbers, okay, great. I think the stock can continue. But I don't have any insight on how those Apple numbers are trending. I know they were cutting a little bit of supply for some products that maybe just weren't selling quite as well as Apple had anticipated, including the smaller iPhone 13 from what I heard. And so that's not good, obviously. And so we'll see what happens with Apple. I think Apple's a big risk for this earnings season. It's the biggest weight. It's the biggest big dog, right? And if Apple pulls down, it can pull down everything else. The good news is a lot of these stocks that are beaten down, PayPal is very beaten down. Netflix is very beaten down. Adobe is. Meta is. Shopify is. So a lot of these stocks are in a position where they should be able, keyword is should be able to, have something inspiring for this quarter. So some of those should be able to go up. Google, I would call it, I'm confused on Google because, less people using the internet, YouTube, everything like that. Google search, but ad rates have been going insane. Tesla's a wild card. And the reason Tesla's a wild card is because obviously interest rates have been going up now recently, which means if you're taking out a car loan, it's more expensive. So Tesla, we'll see. Okay, we'll see what happens with Tesla. That's another one I'm kind of a little confused about, like a Google McDougal. Okay, but big tech, there's certainly some upsides, but some risks. Now, when it comes to a lot of the ARK stocks, a lot of these stocks have started to come back very, very strong here recently. When you pull up like a 1 month off those March 14th lows, that's kind of good as far as that goes. But a lot of these stocks, they're beaten down dog stocks. Let's just be honest. But the good news with those is it's like, can they really get, like a Teladoc, for instance, can Teladoc really get hit again this earnings season? I don't know, man. Obviously, a lot of folks have gone back to regular doctor visits in office and things like that, but this whole trend of virtual healthcare is not going away. Let's just call it what it is, okay? If we think about some more of the stocks I'm watching, a lot of these stocks have been just hit so dang hard, but these aren't really moving the market. And MU is kind of important, really important actually in my opinion. MU, they're basically the biggest memory chip play. Think about NAND, DRAM as I call it. These are sorts of products that MU is a beast in. And so this is obviously, if you ever want to get context on how the overall electronics sector is doing, look at a stock like MU. They're going to give you kind of a lot of insight when it comes to that. UPS is obviously always a very, very important company to pay attention to when it comes. And look at the stock since those March 14th lows. It's right back down where it was, right? And so this is one of those I look at and I'm like, oh boy, what's going on here with UPS? Do people know something here? Because, a lot of stocks have flown off those March 14th lows and have come back super strong. A stock like UPS just isn't really doing it. And so that's where I'm like, what's going on there? So now last I want to kind of share with you guys here is the travel stocks. So travel, I think, from a shorter term perspective, I think it's in a pretty darn good spot. I think regardless of what's going on in the economy, I think travel is going to be extremely strong over the summer. I was looking at some hotels in a place I was looking to go potentially here soon. And my gosh, insanely expensive one, but also sold out across the board. The strip's been insanely busy, especially on the weekends. Even like Thursday, Friday, Saturday, Sunday, the strip's been nuts. Obviously, you guys know I live in Vegas. So I'm expecting travel to be red hot for a while. Now, some of these companies like a Wynn, they have exposure to China, which is bad, unfortunately, right now, because China's been doing some lockdowns again in some major cities and things like that. So that's not good. But a lot of these travel companies should put up some unbelievable numbers the next few quarters. Unbelievable, like some of the best numbers you've honestly probably ever seen some of these travel companies put up. You'll see them put up over the course of this summer, over the next few quarters. So if you're talking about one sector that I'm actually, if I'm talking about like short-term bullish on, it would be a lot of these sorts of companies because they're going to have some pretty bright spots to say. The bad news is with the airlines, and I know a lot of these companies can usually hedge fuel costs and things like that. Fuel costs is still an issue, but on the flip side, we do know that oil has been coming down very recently, all right? And so if you want some good news, oil coming down is a good news for just about everybody. I mean, literally, it's good news for all the companies out there. It's good news for travel stocks. It's good news for consumers. It's good news for literally everybody. So in the last kind of part of this is obviously Jay Powell, the Fed, but we already know they're likely going to raise, so that's going to be what that's going to be. Other bad news is we still got, this past quarter and the upcoming quarter, very, very tough comps to comp against year over year on inflation numbers, so inflation's still going to look pretty sky high. I believe the rate of increase, and I've said this 1,000 times, I believe the rate of increase is going to start to shrink over the course of the summer, which is good news, but in the short term, bad news, okay? Because like I said, the comps are still very, very tough here in the short term, guys. So anyways, just want to share all that with you guys. I hope you enjoyed me just kind of share my perspectives on the market and everything I see out there and things like that. Make sure you check out the pinned comment for that, FTX US, the official crypto partner of me. And once again, when you trade your first $10 worth of crypto, you get a free coin. Hey, you never know, maybe you get a free Bitcoin or something like that. Now, that would be pretty cool. Much love and have a great day.